Welcome back to the FT's coverage of LME Week in London. I'm joined by Andrew Michelmore, CEO of MMG. MMG is the international base metals group owned by China Minmetals Corporation. Thank you for joining me.
It's a pleasure, Helen.
You're an LME Week regular. How are you finding the mood this year compared to your past visits?
I think we're still in that limbo land, people not quite sure. Obviously the high-flying minerals of coal and iron ore have come off in the last period. They were still quite strong last year. Copper's still sitting up at a strong price, but the other base metals, aluminium, zinc, lead and nickel, are all well below their long-term price, and so time's tough there. Everyone's sitting waiting, I think, for the US election to come through and also the appointments of the Chinese leaders to let the dust settle and confidence to come back.
What's your view of how Chinese economic growth is going to play out and fuel that global demand for metals?
I think I'm quite positive about it. It's not that people talk about the boom, it's not about the boom. China is still growing. They've still got 600 million people living on $600 a year, and they need to get those people up to over $2,000 a year. To do that, they've put a lot of infrastructure in terms of rail, which consumed the steel and the iron ore. They now have to start building public housing and factories, particularly inland in the west. That's going to require a lot of base metals, copper wiring, tubing, plumbing and the like. It's going to need zinc for coating the steel to protect it, nickel for stainless steel. So I think that will come through. The issue is this uncertainty at the moment. No one's willing to make decisions while the Chinese government, the new government, hasn't been put in place.
On the supply side, we've seen quite a lot of price volatility recently. What's your view of how Chinese producers are responding to that market movement?
Again, I think it's been interesting. In nickel, they've cut right back. The nickel prices have been low. So the nickel pig iron that they mainly produce from laterite in China has dropped right off. And it's range bound. When the prices are low, they stop production. As they start to come back, they increase production, which puts a cap on it. Aluminium's really tough. The cost of energy has pushed up the costs of production of aluminium, and we're seeing closure of smelters, or the talk of that, to move them inland into the west, where there's isolated blocks of power that can be converted into congealed metal. So I think we'll see more movement on that front. Zinc is very tough. A lot of production in the world is below the top of the cost curve, and so we're seeing some backing out of production, particularly in China, and talks about stockpiling of materials. I think that's going to be an interesting one, particularly as zinc going forward, where over 1.5 million tonnes of production is going to come off in the world as mines run out. So that's an interesting one. I'm quite positive on it. Copper, China's short of copper. They need to import it. Again, it's waiting for the housing, the public housing to pick up, and other urbanisation. The iron ore and the coal, I think, is the ones that had most publicity, coming off very high numbers, dropping significantly. The downturn, particularly through the summer in China, has turned down production, and everyone's sort of sitting waiting to see how much of that's going to come back. But I think it's forced rationalisation of the high cost producers. That's very important for the industry.
Turning to MMG, do you plan more international M&A, and are the Chinese authorities supportive of Chinese miners going out onto the world stage and doing deals?
We definitely know we want to grow. We'll grow internally, but to meet our targets we'll have to do more in M&A. The interesting thing we're seeing out of China is, yes, very supportive for growth, but it has to be value adding. It's no longer growth just for growth's sake, of size, buying capacity. The authorities that you have to go through approvals to get access to the funding now are very meticulous about the acquirer showing that this is actually going to add value. There is a return on the investment, because there have been such bad examples where there haven't been. So I think, again, that's very positive for the market. It means that any deal is a value-adding deal.